Hello, and it's a pretty lovely good evening once again from here, and hope as always that each one of you are absolutely fine, happy, and of course in fine spirits. So after having what we call completed section 1, now we shall be moving over to section 2, and this is your stock and data system. Needless to add, actually I have already told you that as far as dependent branches are concerned, we have three major accounting systems over there, and one among them is data system, and we have already done data system very comprehensively. I've already told you data system is adopted by organizations generally having very fewer transactions, very lesser number of transactions. However, now we are moving over to stock and data system. Obviously, it is part of what we call dependent branches. And if it is a part of dependent branches, I have already told you in the initial stages of this particular chapter that whatever system which we have under what we call dependent branches, all these systems are incomplete. They are not full-fledged double entry accounting system. However, we will see later on actually that a stock and data system is pretty wider and better system in comparison to data system. It is considered as a better system and wider system. Why? Because under data system, we have already seen actually the accounting is done in the books of head office, and generally only two accounts, branch accounts and what we call data's account, are prepared in respect of what we call branch. But here, again the accounting will be done in the books of head office, because I have already told you that under dependent branches, under all the systems, accounting will be done in the books of the head office. But here we will see actually that four major accounts are prepared. Which are those four major accounts that I will let you know in a short while. But here more than two accounts are prepared, as you have already seen. So that is why it is a wider system. It is considered a little bit better system in comparison to data system. Reason being is that under this system, we will see later on that we can compute gross profit and net profit separately. And you must have noticed that under branch account, we were not able to compute the gross profit. We were directly computing the net profit, isn't it or not? So that is why this system is considered a little bit better. And again, this system is also considered better because under this system, we will see actually that we can exercise better control over the stock. And how we are able to exercise better control over the stock, that I will let you know in a short while. So first of all, take the pain of writing few words along with me, and then we will discuss about this particular chapter. So this is this particular topic. So stock and data system. Stock and data system. Stock and data system. Correct? Now we are actually discussing stock and data system. I've already told you stock and data system is also a part of dependent branches. So this is exactly what I am going to write under the first sentence. It is part of dependent branches. So this system is also a part of dependent branches. Part of dependent branches. We have already seen that under dependent branches, basically there are three major accounting systems, as I've already told you: data system, stock and data system, wholesale branch system, sometimes also referred to as what we call branch final system. So it is part of dependent branches. Number one. If it is a part of dependent branches, quite obviously accounting will be done in the books of head office again. So accounting is done in the books of head office. Accounting is done in the books of head office. Accounting is done in the books of head office. In the books of head office. Again, it is not a full-fledged double entry accounting system. It is not a full-fledged double entry accounting system. It is not a full-fledged F-L-E-D-G-E-D, not full-fledged double entry accounting system. Double entry accounting system. Correct? Double entry accounting system. We have already seen that under data system, generally adopted by organizations which have very small number of transactions. However, contrary to that, this system is generally adopted by organization which are having large number of transactions. This system is adopted by organizations having large number of transactions. by organizations having large number of transactions. Large number of transactions. Large number of transactions. So generally such organization which have very large number of transactions, they go for a stock and data system, correct? Now as far as this particular system is concerned, just a moment ago while what we call initiating the discussion, I told you actually that this system is considered as better and wider system. This system is considered as better and wider system, in comparison to data system. In comparison to data system. Correct? So this system is considered better and wider system in comparison to the system which we just did earlier. Another important point is that this system is better and wider simply because of the fact, as I told you, actually under this system we are in a position to compute what we call gross profit and net profit separately, and also we are able to have a better control over the what we call branch stock. So this is so because this is so means why this system is considered better. This is so because under this system, gross and net profit can be separately arrived at. Gross and net profit can be separately arrived at. Correct? Also organization can have better control over branch stock. Better control over branch stock. How organization can have better control over the branch stock, that I will let you know in a short while. Now, as far as this particular system is concerned, in order to understand the intricacies of the accounting, generally you are supposed to prepare under this particular system four major accounts, correct? One is known as branch stock account. Correct? Under this system, no common account will be prepared like what we call data system. Rather, we are going to prepare separate accounts. One will be branch stock account. Under this system, we are going to prepare branch stock account. Besides that, we are going to prepare branch adjustment account. Branch adjustment account. And besides that, we are going to prepare branch profit and loss account. So this system is considered little bit better, wider. As you can see, under this system, we are going to prepare branch stock account, branch adjustment account, branch profit and loss account, and we will also prepare branch debtors account. These are the four major accounts which we are supposed to prepare, correct? Branch debtors account. Whereas under data system, we used to prepare only what we call branch account and branch status. But under this system, these are the four major accounts which we are supposed to prepare. But besides that, in case if in the question there are some what we call balances of, let us say, assets, plant and machinery, furniture, etc., then separately we will have to prepare their account also. So here I will write the branch asset account. For example, let us say plant and machinery is given in the question, though, so I may have to prepare what we call branch asset account. In case some petty cash balances are given in the question, then you will have to prepare the petty cash account also. So four major account, and besides that, we may have to prepare, depending upon the information of the question, we may have to prepare branch asset account and branch petty cash account. Is it clear to you? Branch petty cash account. I have written simply petty cash account. Now, in order to understand actually how these accounts will be prepared, just pay attention. But just a moment ago, I told you this system is better, wider. Why it is wider, you can simply gaze out, because we are preparing much what we call number of account in terms much higher number of accounts in comparison to data system. This system is better because under this we will see we are going to compute what we call gross profit and net profit separately, and besides that we can exercise better control over the branch stock account. And remember one thing, how can we exercise the what we call better control? The reason being is very simple, because we are preparing branch stock accounts separately. Is it clear to you? Now, in order to prepare these accounts, what you are going to actually do, see here. For example, if in the question opening stock is given, I need to require to tell you that opening stock will be written over here and in the branch stock account. And very important point which you need to actually understand in the beginning itself. Branch stock account will always be prepared at invoice price. This account will always be prepared at invoice price. Is it clear to you or not? This is very important to keep in mind. So that means if you are going to write here opening stock, you will be writing it at invoice price. Now, if the item is at invoice price under data system, we used to put the loading on the opposite side, isn't it or not? Even in this particular case, we are going to what we call put the loading on the opposite side, but not in the branch stock account. Then where we are going to put the loading? We are going to put the loading in the branch adjustment account. Is it clear to you? So basic purpose of branch adjustment account is to pull out the loading. Indirectly, when we pull out the loading, it also means actually we are pulling out that particular item from invoice price to cost price, isn't it or not? So I will be writing here on the opposite side. That means because we have written opening stock on the debit side, and loading will be written on the opposite side, but in the branch adjustment account. So in the branch adjustment account, I will write it this way around: load on opening stock. Load on opening stock. So whatever loading will be there, I am going to put it out over here. Is it clear to you or not? Instead of writing what we call load on opening stock, you can simply write stock reserve also. Similarly, when head office is going to send the goods to the branch, obviously you are going to put it on the debit side. Then you will be writing here goods sent to branch account. So goods sent to branch account. Again, because this entire account is going to be prepared at invoice price, so I am going to take the loading again, and loading will be put, as I just told you, on the opposite side in the branch adjustment account. So I will be writing here load on goods sent to branch account. Load on goods sent to branch account. Is it clear to you? Similarly, if there will be closing balance, I will be writing closing balance over here, closing stock. Closing stock. So whatever closing stock will be there, you are going to write in the branch stock account, and besides that, you are going to take the loading part, isn't it? So in order to extract the loading, you will again have to move to the opposite side, because closing stock you have written on the credit side. Now opposite side means onto the debit side, but on the branch adjustment account. So in the branch adjustment account, you will write load on closing stock. Load on closing stock. So whatever loading is there, you will simply put that particular loading over here. Is it clear to you? Now, another important point in this particular what we call method regarding sales. Whatever sales which the branch is going to incur, whether cash sales or credit sales, both types of sale will be written on the credit side of the branch stock account. So I am going to write over here cash sales as well as credit sales. Cash sales. I have already told you under invoicing, branch is actually guided that you need to sell the goods at a price at which we have sent the goods to you. Are you getting my point or not? Indirectly, that means branch is basically directed to make the sales at invoice price only. So whatever cash sales will be there, obviously cash sales will be at invoice price. But you must also understand actually that loading of sales is never done. So we are simply going to put cash sales over here itself. And just a moment ago, I also told you even credit sales we are going to write over here. Credit sales. So in this particular method, important point is that both type of sales will find place on the credit side of the branch stock account. Now the point number one, sometimes students actually get confused because this is branch stock account and suddenly they actually develop what we call confusion with respect to fact cash sales and credit sales, that how these items are actually featuring in the branch stock account. Remember one thing, when we say cash sales or credit sales, indirectly it means sale of goods, and sale of goods means sale of stock. So basically you are putting over here sale of stock. Is it clear to you? Now the next point is that why we are putting up both cash and credit sales over here. The reason is very simple, because unless and until I am going to put what we call the total amount of sales over here, I won't be able to compute the total amount of closing stock which is left with the branch. So that is why in order to determine the closing stock, we need to actually put what we call both type of sales, cash sales and credit sales. Is it clear to you or not? Now, because we have written here credit sales, then we are also preparing branch debtors account. And remember one thing, branch debtors will be prepared in the same manner, correct, as we prepared it under what we call data system. So credit sale will also find place in the debtors account, and you are going to write over here credit sales. Credit sales. So whatever credit sales will be there, you are going to put them on the what we call debit side of the branch debtors, as we used to do it under what we call data system. Now, another important point is that if there will be some opening balance of debtors and creditors, as you remember under data system, there was a common account, that is branch account. We used to write what we call opening balance of debtors over there, and besides that, we used to put it in debtors account. But here, there is no common account. All accounts are separate accounts. So in case if there would be any opening balance of the debtors, you are going to simply write it over here only. So opening balance of debtor will find place only in debtors account. Is it clear to you or not? Similarly, if there will be some closing balance of the debtors, again, it will be written only in debtors account. Is it clear to you or not? Likewise, if the branch is going to receive some cash from the debtors, if you remember under debtor system, cash receipt from debtors, we used to put it under remittances in the what we call branch account. But time and again, I have been telling you, under this particular system, there is no common account. So that's the reason cash from debtors, whatever which we are going to receive, will find place only in the debtors account. So by cash, that means cash receipt from debtors. So cash receipt from debtors will be written in debtors account only. Is it clear to you? In case if there are such transactions like bad debts, like discount allowed to debtors, like sales return. If you remember, all these transactions will find place on the credit side of the debtors account. Under debtor system, we used to write bad debts, discount allowed and sales return only in debtors account. Because under debtor system, in fact, I told you over there at that time while discussing the what we call concepts of the data system, I told you that whatever transaction which will take place between the branch and the branch debtors will find place only in what we call branch debtors. And on account of that, we used to write bad debts, discount allowed, sales return and credit sales only in what we call debtors account, isn't it? But here you need to understand, because you have written here bad debts, obviously when there will be bad debts and when you are going to offer them some discount to the customer, likewise when customer are going to return the goods, on account of these three items, the amount of the debtors balance will decrease, and that is the reason, first of all, why we put them on the credit side. And another important point is that because we have written here bad debts and discount, and bad debts and discount are basically losses, and in this particular method we are preparing profit and loss account also. So that's the reason actually we need to write bad debts and discount under branch profit and loss account also. So bad debts we need to put here also in this particular method. Likewise, whatever discount which you have offered to the customer will also be considered as a loss, and discount allowed will be written over here. because under profit and loss account, we write all the expenses and the losses. Is it clear to you? And very important point is with respect to what we call sales return. If you remember, under debtor system, we used to write sales return only in debtors account. But the point is what we mean by sales return or return inwards. It means such credit customers to or such customer to whom the goods have been sold on credit. They did not find those goods according to their satisfaction, and perhaps due to that reason, actually they have returned the goods to us. So wherever there will be sales return, it means these returns are from the credit sales. And that is the reason actually it's a fundamental principle that sales return must find place corresponding to credit sales. So because in branch debtors we write credit sales, in order to reduce the credit sale, we have to put the sales return on the opposite side. And in this method, just a moment ago, I told you actually we have to write actually credit sales in the branch debtors, in the branch stock account also. So because we are putting up credit sales on the credit side of the branch stock account, so it becomes imperative now for us to actually write sales return on the debit side also. So that means if there will be sales return, you need to understand and you need to keep it in your memory that it will have to be put on the credit side of the debtors account, and besides that you are going to put it on the debit side of the branch stock account. So that's why you are going to write here sales return. An amount of sales return will be written over here. Is it clear to you or not? So very important point with respect to sales return. Now, whatever expenses which head office will incur on behalf of branch, like wages, salary, insurance, advertisement, etc., all those expenses will be written on the debit side. I'm simply writing expenses. It includes wages, salary, rent, advertisement, etc. All expenses will be put on the debit side of the branch profit and loss account. I was just talking about earlier, actually 4 major accounts are there, but in case if suppose in the question, let us say there is a balance of furniture or plant and machinery. So that balance, I will open plant and machinery account or furniture account, and I am going to write the opening balance of the same over here. Is it clear to you? Whatever opening balance is there, I am going to write it over here. And then obviously information regarding depreciation will be given in the question. So I will provide the depreciation, and that depreciation will reduce the what we call value of the asset. So we have to write depreciation on the credit side, and ultimately this depreciation will be taken to profit and loss account. Suppose plant and machinery is worth rupees 1 lakh in the beginning, and 20% is the depreciation. So 20,000 will be depreciation, and now your closing balance will be equal to 80,000. Correct? Because in this method there is no common account, we need not require to put opening and closing balance anywhere else. Number 1. Number 2, whatever depreciation will be there, that depreciation will be put on the debit side of the profit and loss account. Honestly speaking, if you have understood the concept, correct, then you need not require to prepare what we call this particular account, because now you understand that only the depreciation amount will find place in the what we call P&L. So there is no need to prepare branch asset. Once you are able to understand the concept, then you can dispense with this particular account. So whatever depreciation will be there, you are going to actually write it over here. Similarly, regarding petty cash, if there will be any opening balance of petty cash, you are going to write over here. Then whatever petty cash will be sent by the head office during the current year, you are going to write here petty cash account debit to cash account. This will be the entry. So this is the total petty cash available with the branch. Now, it will be given that branch manager has spent some petty cash. So whatever amount which has been spent out of petty cash, you are going to write it on the credit side, and you are going to write here by profit and loss account. In bracket, you will write the amount spent. So whatever amount which has been spent, correct, of course that is considered as an expense, and that will be what we call posted to the profit and loss account, and then we will be left off with what we call closing balance. So in this method, opening balance of petty cash, closing balance of petty cash, and cash sent by head office to petty cash will find place only in the petty cash account in case if you are preparing the same. However, whatever petty expenses will be there, ultimately petty expenses will find place on the debit side of profit and loss account. So if you have understood the concept, so you can directly write petty expenses over here, and you need not require to what we call prepare the account. So petty expenses account, petty expenses. So all petty expenses will find what we call place over here in the profit and loss account. So this is how we are going to prepare these four major accounts. Is it clear to you? Number one. Number two. Now there are some what we call intricate points which are associated with this particular method. Let's have a look over that. If there will be goods, see here, goods sent to branch is there. Now if there will be given in the question goods sent to branch return, it means such goods which have been sent by head office to the branch. Now branch has returned. Obviously I am going to write those goods over here on the opposite side. Goods sent to branch returns. First of all I am going to write it over here. And then I will take the loading also, because we know that loading is done on goods. So I will write here on the debit side of branch adjustment account, goods sent to branch returns. Correct? Whatever loading part will be there, I am going to put it over here. Similarly, if it is given in the question that there are some goods which are still in transit, I am going to write it over here. Goods in transit, GIT. Goods in transit means we have sent some goods during the year. And out of that, some goods are still in the journey. So those goods will be put on the credit side of the branch stock account, and the loading part will be taken over here. Goods in load on goods in transit. You are going to put it over here. Is it clear to you or not? Besides that, sometime you may be given this way around, that this branch in respect of which you are preparing the accounts, this branch has transferred some goods to some other branch. For example, the head office is having two branches, branch 1 and branch 2. And let us say you are doing the accounting for branch 1. And it is stated in the question that as per the direction of the head office, branch 1 has transferred some goods to branch 2. Correct? Now, because our branch 1 has transferred the goods, so goods with us will get reduced. So in order to reduce, we will have to put it on the what we call credit side. So goods transferred. So sometime we may come across such item, goods transferred. So goods transferred, I am going to put it over here. Is it clear? And remember one thing, because it is a case of goods, I will have to put the loading part over here, goods transferred. Now goods transferred, regarding this particular item, you need to exercise caution. This time our branch is transferring the goods. Opposite may also happen. For example, it may be given in the question that other branch has transferred goods to your branch. So in that case, I will write goods transferred on the debit side and I will take the loading on the credit side of branch adjustment account. Is it clear to you or not? Besides that, in this particular case, two important items which will play major role, and that is why I am going to write it over here this way around. One is abnormal loss. Abnormal loss. Abnormal loss, when I am writing, it means abnormal loss of goods. Is it clear to you? If it is given in the question, there are some abnormal loss of goods. If it is given in the question, so you are going to write here abnormal loss. Let us say we presume that head office sends the goods to the branch at a margin of 25% profit on cost. Let us say head office sends the goods to the branch at 25% profit on cost. So as you know, if I am going to compute the rates, cost will be 100, margin will be 25, invoice price will be 125, and rate of loading on invoice price will be 25 by 125, that is 1 by 5. Is it clear to you? And let us say question has stated that there is an abnormal loss of 10,000. So first of all, I am going to write this 10,000 over here. And then regarding abnormal loss, you have to be very careful. Of course, this is abnormal loss of goods, because whatever goods which you have sent, out of those goods, some goods have been abnormally lost. So first of all, in order to what we call reduce the amount of goods sent to branch, you will have to put them on the credit side of the branch stock account. And after that, actually, you are going to write here loading also. Loading on abnormal loss of goods. Now, in this case, what will be the loading amount? Because 10,000 is the amount of abnormal loss. And loading rate, I just told you, will be 1 by 5. So you will be writing here 2,000 rupees. So 2,000, that means loaded part will be written on the debit side of the branch adjustment account. Regarding abnormal loss, loading part you are going to put on the debit side of the branch adjustment account. And then out of 10,000, 2,000 is loading. So that means remaining part 8,000 will be considered as abnormal loss at cost. Now abnormal loss at cost will be written. Abnormal loss at cost will be written on the debit side of branch profit and loss account. Abnormal loss at cost. In this case, at value of 8,000, you are going to put it on the debit side. So in case if there would be abnormal loss in the question, first of all, you need to write the full amount of abnormal loss on the credit side of the branch stock account. Then you will have to bifurcate that into two parts, one loaded part and then abnormal loss at cost. The abnormal loss carrying loading will be put on the what we call debit side, and abnormal loss at cost will be put on the debit side of branch profit and loss account. The reason being is that actually profit and loss account, you must understand, is always prepared at cost, while branch stock account is always prepared at invoice price. Is it clear to you or not? So we need to break and split the amount of abnormal loss. This is very important to understand. Sir, what about normal loss? I'm coming over to that particular point. So likewise, if in the question you will be given normal loss, suppose in the question you are given normal loss of goods, normal loss of goods. Just allow me a second. Actually, I just want to keep this space free. Let me write closing stock here. Closing stock. Correct? Closing stock. Okay, so I was talking about normal loss. In case if in the question there is given normal loss of goods. Normal loss of goods. What we mean by normal loss of goods, actually you all are doing costing. You have this subject costing also. You should be in a better position to, or what we call define normal loss. What we mean by normal loss. See, there are some goods. The nature of such goods is such that whenever we are going to supply such goods to somebody else, some loss will always take place. For example, let us say our firm deals in what we call some liquids. Let us say oil. Correct? We supply some liquid items to a customer. Is it clear to you? And when we are going to supply, let us say we have supplied 1000 kg of oil to this particular customer. So howsoever foolproof packing we might what we call do, in spite of that, some loss will take place naturally, on account of weightage, on account of what we call leakage, on account of seepage, on account of evaporation, because the nature of the commodity is such. Oil, the nature is such that there will be some weight loss, there will be some leakage, there will be some what we call seepage, there may be some evaporation, etc. So basically in accounts, normal loss is defined as such loss which is inherent in the nature of the commodity. This loss is inherent in the what we call nature of the commodity. The nature of the commodity is such that we cannot what we call stop this loss from taking place. Howsoever care, caution we may actually exercise, but we cannot what we call stop this loss from taking place. So this is known as normal loss. In normal general accountancy, this is known as normal loss. But let me actually clarify. Very important point, and many people do not understand this. In accounts, you are not going to consider any loss as normal loss. Sorry, in branch account, you are not going to consider any loss as normal loss unless word normal is written over there. You cannot consider any loss. Remember one thing, the branch accounting system falls under special accounting system. Branch accounting, hire purchase accounting. There are some accounting systems which are special accounting systems. So there are some special rules. In normal accountancy, I've already told you, weight loss, leakage, seepage, evaporation, these are pilferage. These are considered as normal losses. However, under branch accounting, you are not going to consider any loss as normal loss unless it is prefixed or suffixed as normal. That means normal must be written over there. Then only you are going to consider it as what we call normal loss. This is a very important point, and later on also I am going to discuss that. So, in case if there will be some normal loss, what you are going to do here, you are obviously, because some loss has taken place, some loss of goods has taken place. So, whatever goods which we have sent, correct, because ultimately through this particular account we want to show what worth of goods have been received by the branch. So that is the reason we need to put normal loss on the credit side, number one. However, normal loss is not split similar to abnormal loss. The entire normal loss, entire amount of normal loss will be taken to the debit side of branch adjustment account. entire normal loss. We need not require to split it into loaded part or cost part as we did with respect to abnormal loss. Is it clear to you or not? That means suppose if in the question it is given normal loss is 10,000, first of all I am going to write 10,000 on the credit side of branch stock account, and later on straight away I am going to take it to the debit side of the branch adjustment account. I need not require to split it. 10,000 is normal loss. We know that loading is actually 2,000 1/5 and cost is 8,000. Indirectly, you can say the loading and cost part both is written in what we call branch adjustment account. Correct? So directly or indirectly, we are writing the entire amount, full amount of normal loss over here. But why? Some of you may be quite curious and keen to know about that. First of all, you need to understand what we mean by branch adjustment account. And what is the purpose of the branch adjustment account? You must have noticed by now actually that branch adjustment account basically is being framed to pull out the loading factor. Pull out the loading factor. Correct? Actually, what is our gross profit? Our gross profit is nothing but our loading only. So indirectly, this branch adjustment account is almost like a trading account. It is almost like a trading account, and we will see later on that by balancing this particular account, we are going to get the net profit. So it works almost like a trading account. Now you remember right from your class 11th itself, you have been preparing trading accounts so often. Under trading account, what you write? What you write? The normal transactions of the business. What are the normal transactions of the business? Like sale of goods, like purchase of goods. Are you getting my point or not? Because just a moment I told you, normal loss is considered as a normal part of the business. Because we know that whenever we are going to send such goods, some loss will take place. We know. So it is considered as a part of normal business practice, and that is the reason actually entire amount of normal loss, without splitting it into loaded part and cost part, we are going to put it in the what we call branch adjustment account. Is it clear to you or not? Right, so it is absolutely clear. So if it is clear, so these are the items which you may come across, and I have already told you abnormal loss, normal loss important. Sales return, I told you it will find place both in what we call debtors account and also in branch stock account. Another important point, both type of sales we are going to put in the what we call branch stock account. Now the next point is, now we will have to actually find out the net profit. Under this system, in order to find out the net profit, because that is the basic purpose of the accounting. So first of all, you need to know and understand how you are going to tally your branch stock account. Is it clear to you? Let us say, if I tally my branch stock account, let us say this is my branch stock account. Is it clear to you? And my credit side figure is higher. So obviously I am going to get the balancing figure on the debit side. Obviously I am going to get the balancing figure on the debit side. Now, if your credit side is more than, as I was talking about, if your credit side of the branch stock account is more than your debit side, you are going to get the balancing figure over here. You are going to get the balancing figure over here. Now, this balancing figure will be treated as, logically it should be treated as opening stock. As per rules, the first preference, if you get the balancing figure on the debit side of the branch stock account, the rule number 1 is that logically you should treat it as opening stock. But problem is that 99, you leave alone 99, almost 100 times we will always be given information regarding opening stock, and opening stock will always be given in the question. So we cannot treat it as opening stock. Logically, as per rule, we should then treat it as goods sent to branch account. Again, goods sent to branch account will always be given in the question. So, the last preference will be to treat it as surplus. So, most of the time you will see that whatever balancing figure which we get on the debit side of the branch stock account, it is treated as surplus. It is treated as surplus. Is it clear to you? If the balancing figure will be on the debit side of the branch stock account, then it is treated as surplus. Now, you let me know why you do the business, or for that instance, why the entrepreneurs actually they do the business activity. Because they want to earn surplus, they want to earn profit. That means to earn surplus is considered as a natural phenomena of the business. It is considered as a normal business activity. And just a moment ago, I told you actually, all normal activity must be put on in the what we call branch adjustment account. And that is the reason we will write the full amount of the surplus. We will write the full amount of the surplus over here itself in the branch adjustment account. We will write the full amount of the surplus in the branch adjustment account. Is it clear to you or not? Is it clear? Now, if till up to this particular point things are absolutely clear, now the next point is with respect to balancing figure which we are going to get on this side, that means on the credit side. You will get balancing figure on the credit side only when your debit side will exceed the credit side, isn't it? Now, as per rules, if there is balancing figure on the credit side, logically you should consider as a first preference closing stock. You should consider it as a closing stock. But most of the time closing stock will be given to us. So if closing stock is given to us, in that particular case, second preference and the last preference on the credit side, only two preferences are there. One is closing stock, and because most of the time you will be given closing stock, so that is the reason now you will have to consider it as deficiency. It is known as deficiency. There are many other names. It can be also written as shortage, deficiency or shortage, whatever you may like to write. So that means if balancing figure will appear on the credit side of the branch stock account, in that case, logically the first preference should be given to closing stock, but closing stock most of the time will be given in the question. So you will have to treat it as deficiency. Now, deficiency indirectly means sort of abnormal loss. You will treat this deficiency will be treated as deficiency here means these goods are deficient in the sense that they are not compatible to the quality of the goods which we sent. So there is some deficiency in these goods. So that is why they are basically considered as a sort of abnormal loss. So that is why they will be treated absolutely similar to abnormal loss. And what was the treatment of abnormal loss? I told you earlier a moment ago, the loading part will be written over here and cost part in the P&L account. So similar to that, whatever loading will be there in the deficiency, for example, amount of deficiency is 10,000, or for that instance, let us say 20,000, and rate of loading is 1/5. So I will write what we call loading on deficiency 1/5 of 20,000 over here, and then remaining deficiency, that is deficiency at cost, will be written on the debit side of profit and loss account. Deficiency at cost. Deficiency is also known as shortage. Sometimes it is also known as spoilage. So this is how you are going to prepare what we call branch stock account. After having prepared the branch stock account, your next target will be to finish up your branch adjustment account. I just told you your branch adjustment account will deliver you gross profit. Correct? So you will get balancing figure as gross profit, or for that instance, gross loss. So gross profit. So whatever balancing figure will be there, that it will be considered as gross profit. Obviously, if it is your gross profit, then you are going to write gross profit on the credit side of the branch P&L account. Gross profit over here. Is it clear to you? If in the question, let us say there is written insurance claim, etc. Insurance claim is an income which the organization gets not because of what we call its business activity. Any income which organization derives not because of sale of goods or not because of renderance of services, such incomes are put on the credit side of profit or loss account. If you remember when you did earlier, your what we call final accounts, correct? In your earlier phases of education, you used to write commission received, rent received, dividend received, etc. on the credit side of P&L. But no one told you why you are putting them on the credit side of P&L. Because those incomes organizations is deriving not because of sale of goods, neither through sale of services. So any such income or receipt which an organization derives, correct, will be put on the what we call credit side of profit or loss account. So that is why in case if in the question there will be some insurance claim, you are going to put them on the credit side of the branch P&L account. Is it clear to you or not? Is it clear to you? Right. Obviously now after tallying it off, you are going to get your net profit. So this is how you are going to get your net profit under this particular system. Is it clear to you or not? Is it clear? Absolutely clear? I hope so. It is absolutely clear. So in the next session, when I will meet you, we will start with some questions regarding what we call this particular topic, and lots of questions we have already kept. Near about 100 questions we are going to do under this particular what we call chapter, because it's a pretty formidable chapter, important chapter. So that's the reason actually why you need to put up a bit of what we call extra effort, correct, to have what we call firm grip or on what we call intricacies of this particular chapter. So on such count, I will take leave of you, and quite obviously, I am looking forward to have your suggestions. And remember one thing, and you are going to get the maximum mileage of these sessions when you are going to have the books. So my sane advice is that you must go for the books, and we are going to cover the entire course. You need to require to what we call worry on that particular count. Correct? So on such note, we take leave of you. As I said, shall meet you in the next session. Obviously, in the next session, we are going to do some questions with respect to this particular topic. Till then, time to say goodbye.